Welcome back everyone to another episode on Ang's channel. Today, yet another stock review. Today, we will be reviewing on one of the financial company called the UMBF, UMB Financial Corporation. So without further ado, let's get right into it. So over here we have the chart on the UMBF company, and the stock has been actually performing quite well as it has been experiencing a consistently uptrend. So throughout the years 20, 30 years, so right now it's actually sitting at a all-time high. So without further ado, let's get right into whether or not if this company is actually a very strong economic mode company with continuously generations of cash as well as profits. So first of all, we have the revenue of UMBF, whereby we can actually observe over here the performance of the revenue for this company is actually doing quite well as it's just continue growing in an uptrend. And whereas for the net income of this company is also performing a similar results and showing consistently generations of profits as well as their cash. So as for their free cash flow, the free cash flow of the company is actually quite well, especially during the year of 2022. However, the cash flow starts to grow or then reduce, and then starting to reduce, become lower, and this might be one of the things that should be concerned about, as if the cash flow of the company actually turns negative, it's something that should be concerned, whereby they start reduce the power of them generating profits as well as cash flow to provide for their investments. So looking at the balance sheets of this company, we have the total assets of 73,000, whereas the total liability at 65. So overall their assets is more than their liabilities, and for their net cash it's actually in a positive value right now for the year of 2025, so signifying that they actually starts to turn their company into holding more cash than their debts. As for the ratio, we have the PB ratio actually sitting around 1.32. The price is actually quite expensive based on my observations on the chart, whereby it just sit at the all-time high currently. We have the debt to equity ratio sitting below 0.5, so it has been reducing their debt significantly, and the value of the debt to equity ratios has reduced from 1 and now is less than 1 and even less than 0.5. And we also have the ROE of 12%. So the ROE of this company is actually sitting at a very consistent level. It's actually not bad, and also have the ROA of around 1.1%. Right now we'll be going into details of what does this company actually do. So it's actually considered as a US regional bank and financial services company in Kansas City. So what it do is, first of all, is the commercial banking. So basically they loan to business. They have commercial real estate loans, deposit accounts. They also have consumer bankings, the mortgage, credit cards, and personal savings. And the third is going to be their institutional assets servicing, whereby they have custody service, trust service, as well as fund administration such as ETF and mutual funds, so on. They actually act as generally a banking system or a financial corporation that provides most of the basic financial tools to consumers, to investors, as well as to institutions based on their needs. And for their stream of income, basically first is going to be their net interest income. So the traditional banking method, whereby they actually earn interest from their loans as well as the spread of their interest incomes and so on. And second of all is the non-interest income, which is going to be their fee base. Is the fee whereby they provide their services such as their credit card fees, their trust fees, as well as fund servicing fees. So the strength of this company, first of all, is diversified revenue. So like any other transaction or financial company, whereby they provide one of the most critical thing existing in between business as well as investment, which is going to be transactions as well as financial tools. So this allows a lot of consumers as well as institutionals, company, businesses to have cash flow, as well as the ability to have loan to grow as well as to expand their business. Financial company or financial sector is actually considered as one of the company with a lot of needs, and it's actually sitting in a high demand level and will always be in this form in the near future. and as long as there's no specific changes or huge changes in the financial sector systems. Second of all is the strong deposit base. Third, they have also asset servicing, for example, their trust custody, so as fund administrations, and also have conservative risk culture. So generally, they have very solid credit underwriting compared to other company or other aggressive lenders. As for their weaknesses, it's actually subject to US regional banking cycles. So, and second of all, it's going to be their interest rate sensitivity. So their margin actually compresses when the yield or the interest rate actually drops. So they actually earn less, or the margin of earning from the interest or the loan they provide actually reduce. And thirdly, is going to be limited scale with mega bank compared, such as the BAC, JP Morgan, as well as other companies with very huge sectors in terms of financial and banking system. And finally, it's going to be their regulatory pressures, whereby this kind of mid-size or regional banking, they actually face increased capital as well as liquidity requirement. So lastly, we'll be looking at the economic mode score for the UMBF company. Actually, compared to other strong company, you can actually kind of notice the difference between, for example, the UMBF versus the JP Morgan, Bank of America, and so on, whereby they are just existing as regional bank and they are considered as mid-size compared to very large scale company like JP Morgan, whereby the UMBF actually inherit a mode score from Growth Focus, whereby it's narrow, Morningstar provide no mode, Seeking Alpha providing a moderate mode, and so on. As for the GPT AI itself, it actually provides a very niche narrow mode and very weak economic mode score. Overall, I do view this company as one of the company whereby they provide a very strong consistent returns, and as well as you can actually observe from their reaction of the price in terms of charting, you can see it has been generating reasonable returns to their investors. However, compared to other banking company whereby they have similar competitions such as JP Morgan and Bank of America, this company just does not stand out, and it lacks of that strength as well as economic moat when it compares to other more competitive company. So overall, this company is actually providing a very consistent returns. However, the comparison to other competitive company, for example JP Morgan and Bank of America, this company just shows that it does not stand out and does not have the strengths when it comes to completely focus on comparing of winning over their competitions. So in my view is that this company is actually a company with steady returns. However, the growth is actually very limited, whereby I can just buy JP Morgan or BAC, which they are both in a similar sector, but in a larger scale as well as larger returns in terms of their percentage. So I guess that is all for this company. It's a very stable company, but compared to other huge company, this company may not consider as a very good investment for my portfolio. And also, this is not financial advice. Please do your own research and due diligence before you make any money decisions on these investments and also other investments as well. So I guess that is all for the review for this company, UMBF. I hope this helps you. If you like it, share it, like it, as well as subscribe to the channel. I'll see you guys on the next one. Goodbye.